Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson, I'm going to show you how we use options to trade directional, bullish, and bearish patterns with leverage and limited risk. We have a technical-based approach to trading anything that moves. These are just a few of the many bullish setups that we trade. And then this is our starting point, and then we overlay the other concepts that make up our method, which is things like, where is this picture in the overall trend? Is it on support or resistance? What do multiple time frames suggest? Is it showing relative strength or weakness? What are the broader markets doing? And then we decide if we're going to trade stocks or options. And if we're going to trade options, are we going to buy options, which give us the benefit of leverage, limited risk? Because remember, whether we buy an options or stock, our maximum loss is what you paid for it. And a third benefit actually is if the position fails and you take your stop loss, then you actually lose less money than you did had you traded the stock and hit your full maximum loss per the trade position size. So here's one trade here, Twilio, that we gave our subscribers. Our daily charts just show simple red and green candlesticks, red and green color-coded volume, and we use 3 moving averages just to speed up the analysis. The blue is 20, green 50, red 200. So we kind of had a topping pattern here. We took out some prior pivot lows going sideways. This was an attempted bottom, which failed. So that's what we call an upside shakeout. We have a wide range bar, went sideways for a while, but it's in a downtrend. We have lower pivot highs, lower pivot lows. It's under all 3 of these major moving averages. This was an attempted breakout, which failed. The next day it gapped down, a small little doji bar hanging on by his fingernails here in a downtrend. This next bar is what we call the tail. That's why I'm showing you this poker player. It's a poker term saying, haha, you have just showed your hand. I now have much higher probability confidence in the pattern of going in the intended direction, which is down in this case. And the reason is because everything I just described, but this is a topping tail that filled the gap, range expansion, closing breakdown. This closed under all of this support here. And notice all this consolidation was in the bottom 50% of this bar. That's a sign of relative weakness. Every trade we take, we also use the concept of a tradable void. So for a short, it means look to the left. And there's no significant resistance or support to prevent a nice fluid move down. So we entered on this particular bar and we added, and we gave this as a bearish directional option trade. This is a closed trade now. But every one of our trade alerts we send through Telegram. We do the same format with the date, the symbol, the strategy that we're doing, stock or options. And in this case, we bought the $61 puts. When you buy puts, it gives you the right but not the obligation to sell the stock at the agreed upon $61 strike price on or before expiration. So notice we're only paying $3.45 a share to have this bearish position, which is going to increase in value as the stock falls. Because remember, we have a contract allowing us to sell it at this fixed $61 price. And we give the technical setup, of course. It's a bearish gap breakdown. Then we give a stop loss and management in between. So just using a very simple trail, we were able to book almost 70% return with long puts as a directional option trade. Next example, Tesla here. You can easily see this big momentum move here. Topping pattern came in. This was a tell. This is a breakout failure, trading under prior major support. Bearish consolidation, just like the other example. Now I have a gap under support, topping tail. And that would have been an adequate place to start scaling into this, buying puts here with a stop over this prior pivot up here. We actually didn't get in here, and that's why we call it a continuation breakdown after this bearish gap. Notice it went sideways for 3 days and could not bounce. That's the concept called relative weakness, continuation breakdown, price void. In this case, we bought what's called a bear put debit spread, where we buy one put option and we sell a further out of the money put option. The difference of those two prices is the net debit. So we paid $2.50 a share for this debit spread, which we profit as it falls. The reason we do spreads is it reduces the price of the position that we pay. So in exchange for reducing the price, we're capping our potential maximum gain, but that's a trade-off that we do in various circumstances. We sold the first third position into the weakness right here. We made 56% return on capital in 1 day. Then I gave a target for the next part, and then we just go into trail mode. So PHG, it was announcing earnings the following morning, and we wanted to speculate on a bullish reaction to earnings, but with limited risk. And we went into the option table and we bought a month out $20 call option. So the stock is trading at 19 and change. We only paid 40 cents a share for these options. That gives us the right to buy PHG at $20 strike price on or before May 19 expiration, pay 40 cents a share. If you buy 10 of these, it will cost you $400. So in 1 day after earnings, we sold our call options for an average exit of $2. And so in this example, we risked $300 a trade. We made 400% return on capital. That equated to $1,280 on using the master trader approach to buying options into earnings with a bullish bias and limited risk and leverage. All of those trades I just showed you, we gave last week to our advisory swing and options letter, where we buy and sell stocks, options, ETFs, cryptocurrency, anything that moves. Amazing market analysis my partner Greg Capper gives over the weekend with the market sector, market internals, techno fundamental analysis. Come check it out. Go to mastertrader.com/advisory swing and take a no-brainer 30-day trial. As always, email Greg or me with any questions. Good trading. Look forward to seeing you in the next trade review video.